First of all, say good morning, everyone, and welcome to this York Economic Snapshot. It's the first in a series of quarterly webinars, which are aimed at basically sharing the trends that are shaping York City Centre's economy, and sharing those trends with local businesses and strategic partners who we work with closely here at the BID. This session specifically will focus on the economic insights from the recent festive trading period in York. We're classifying that period as the months of November and December 2025, as we know that these are a key period for revenue generation across both retail, hospitality and the leisure sectors. We'll also be taking a look at how York's performed more generally over 2025 and compare with national UK benchmark figures wherever possible. Okay, so firstly to introduce myself, I'm Chris Bush. I'm business manager at York Business Improvement District. I manage much of the company's data and as well as data-led projects that we deliver. A quick overview of what we'll be looking at today is firstly an introduction to something we're calling the York Data Intelligence Hub and more of the BID's plans to share and make data available moving forward. We'll then look at the headline metrics for how York performed during the festive trading period, as I've just mentioned, and then take a deeper dive into each of the economic data sets that we hold for York and break those insights down into further granular detail. We'll be moving at pace to make sure that we can fit everything in, but please do use the chat function to leave your questions and comments, and there will be time reserved at the end of the session to answer and address each of these. We'll also circulate the slide deck in a communication after the webinar has ended in the next couple of days, so there's no need to write down any of the figures that you see on screen. All of the information will be available after the fact. You can also access all of the York BID's archive of historical insight reports via our website, which is there is a link to in this report, which will also be shared with you. Okay. So first off, today's webinar is delivered as part of a new initiative which we're calling the York Data Intelligence Hub. The hub aims to bring together economic data from a number of trusted sources to offer businesses and partners a clear insight into York's economic performance, and particularly how it performs over time. What is the trajectory? What is the trend of performance? Is it up or is it down? The initiative is delivered in partnership with York St John University Business School, who are offering in-kind support through a dedicated data analyst, and much of the data held within the hub is funded through the York and North Yorkshire Combined Authority by way of a grant which was secured through the Vibrant and Sustainable High Streets Fund. There are also a number of partners who contribute data to the hub, including City of York Council, Hospitality Association York, and LNER. The core objectives of the hub are to equip local businesses with actionable data that they can use in day-to-day operations and planning for the future, providing a robust evidence base to evaluate events and projects that happen in the city and how we can strengthen those over time, to support policymakers wherever possible in their decision making, especially around critical issues for the city centre, and to foster alignment across our communications so that York has a consistent message about how it's performing. The key outputs of the Data Hub are firstly a dedicated web page and interactive dashboard. Now that's actually an asset that's currently in development and not available yet, but we're hoping is going to be really valuable as something that you can literally access online day or night, which will essentially show you the latest economic statistics for York City Centre, including things like footfall and spend, and that'll be updated monthly. So that's something that we're hoping to have ready very soon and to talk about more at the next webinar, which will likely be in April. Then obviously we've got the webinar series itself, and then also monthly reports which are published on the BID website, which you can access as of now. Right, okay, so that's moving on from explanation of the data hub. We're going to begin looking at some of the data itself. So we've pulled out a few statistics that we'd like to draw your attention to that we feel are like the headline figures for the festive trading period. And I suppose at a glance, the results are a little bit of a mixed bag. There's a few minuses, there's a few pluses on screens. We'll explain more about what these figures mean as we work through the session. But moving from left to right, the four headline stats are firstly for spending in the city, and that's the growth or the change in spend during the festive trading period in 2025 compared to the previous year, 2024. So year on year growth or change, which is denoted by the YOY acronym. You'll see that, as well as YTD, which is year to date. You'll see those acronyms a few times throughout this, so make a note of that in your mind. Year on year growth for festive trading in 2025 was down in terms of spending and sales by 5%. But year to date across 2025, not quite as pronounced a decline at minus 1.8%. Then if we look at footfall specifically, so a measure of number of visitors to the area, across November and December 25, footfall was down year on year by 8.1%. Then looking specifically at hotel occupancy, how full hotels have been during the festive trading period, we can see that year on year they were actually up by 2.3 percentage points compared to 2024, and then year to date also an increase of 1.3%. And then shop vacancy, which is essentially the number of empty commercial units in the city centre, was recorded at 5.6% during November and December of 2025. Okay, so now we'll take a closer look at the data sets individually, starting with Beauclair, which deals in offline debit card transaction data. So that's basically transactions which are recorded within bricks and mortar commercial premises within York City Centre. The data set includes approximately 1.5 billion transactions, which account for £45 billion worth of spend nationally, and that represents roughly around 7.5% of all UK spending within any given year. The data is sent to us and updated on a monthly basis, and that typically comes through sort of midway to the third week of each month. And we have historical data dating back to 2022, which we can use to make comparisons and measure growth year to year and year to date, which is very useful. There are a couple of caveats with the data. To point out that it is only just spending in store on debit cards. It doesn't include any credit card transactions, any online purchases, any cash payments, or any spending via debit cards which are issued outside of the UK. Okay, so now looking at the data specifically, this graph shows the year-on-year change or the year-on-year growth in debit card sales during the festive trading period. As I mentioned, that's November and December of 2025. And it sits those figures alongside the UK benchmark by which we can measure performance. So moving from left to right, we can see that York sales during festive trading were down by about 5% year on year, and that's marginally outperformed the UK benchmark, which sits at minus 5.3%. So not a great statistic for York, but in line with what's happening elsewhere in the country. And then if we look at the year-to-date sales, this is slightly more positive, a downward trend of 1.8% across the entirety of the year, and quite a decent outperformance of the UK benchmark by 1.5 percentage points, that being down 3.3%. So if you can wrap your head around how this graph looks, we'll be using this format to look at different areas of York's performance as we go. So we'll use the same kind of consistent layout. So this graph shows us the monthly sales trends over the past 3 years. The left-hand side being total monthly figures for January, working all the way over to December on the far right. And then the labels above the bars show the percentage growth or percentage change year on year for the 2025 figures specifically. So we can see that at the start of 2025, the sales were actually quite strong, mostly seen as increases through January all the way until May, May being the peak at an increase of 6% year on year. But then performance weakened during the following 7 months of the year, the remainder of the year essentially, with the largest or the sharpest decline seen in June, which was down by about 9.9% in total. Within 2025, December recorded the highest monthly sales, which is quite typical for any given year. December trading tends to be the best month for York in terms of retail, hospitality, and leisure, and that accounted for around 12% of all spending across 2025. So then we can look at this in the same format, but for the number of customers that were spending that are associated with those sales recorded during that time. And then again, moving from left to right, we can see that there is a downturn again, which follows the sales figures. So there is the number of customers during festive trading fell by 3.8%. However, that being negative still outperforms the UK benchmark, which stood at minus 4.6%. And then similarly, the year-to-date figure is slightly less pronounced at minus 2.5% compared to 2024, ahead of the UK benchmark by 0.8 percentage points at minus 3.3%. Then once again, we can look at how the customers were distributed across the year, starting in January, quite a low figure there, but some decent upward trends kind of earlier in the year, but then some sharper declines as we hit June, specifically September and November being the worst affected months for recorded customers in York City Centre. And 2022 actually recorded the lowest total annual number of customers of any year within this data set. So not necessarily a positive insight to report on, but potentially an indicator of more online shopping or online shopping having an effect on the number of customers. Okay, this is a slightly different graph and a different outlook on the spend data. This breaks down the total sales for the festive trading period into their specific sectors. And I imagine this is possibly one of the more interesting or useful graphs for business owners from the meeting today, as it will speak to your industry and your sector specifically. So this graph shows the level of spend and the year-on-year change for each of those sectors. And we can actually see at the top there that food and drink is by far the biggest attractor of revenue in the city and accounts for around 37% of all sales in York. And that's a consistent statistic that we see across the entire data set dating back to 2022. It's around 37%, but the sector itself was down in terms of sales by 1.7% during festive trading in 2025. Then as we go down, there are the other sectors such as grocery, fashion, general retail. These sector definitions are classified by Beauclair, who supplied the data. There is a link in the document here at the bottom where it says source, which will take you to an FAQ document which specifies which businesses are included within each of those sectors if you want to find out that information. And just a caveat on this outlook. So just to reiterate that the data is just for debit card spending that occurs within business premises. So it doesn't include any online or advanced bookings. So you can see tourism and entertainment are quite low in terms of the share of spend at the bottom here, but that's likely because the majority of their revenue is generated via online or advanced booking. So just to make you aware of that. Okay, so if we move on to the next slide, we're now taking, I suppose, a snapshot of the two bigger or substantial sectors within York, and that's food and drink and retail. So looking at food and drink specifically, as we have done on the previous graphs, the graph shows the year-on-year change or the year-on-year growth in food and drink sales. Starting from the right, we can see, sorry, starting from the left, we can see that food and drink sales decreased by 1.7% during festive trading, and this slightly outperformed the UK benchmark, which was down by 2.1%. However, across the year, it's a less positive outlook, with food and drink actually reducing year to date by 3.2%, and that's an underperformance against the UK benchmark of 2.4%. So York food and drink not doing so well in 2025, but doing a little bit better towards the end of the year. Then if we look at the distribution of the monthly spend across the year, we can see that there's some rather substantial shortfalls in both June and September, which are accounting for the majority of that downturn, but some substantial downturns from June period onwards within 2025. And interestingly, the best performing months for the sector were actually January and December in terms of growth, where January was up 0.3% and December was down just 0.3%, so marginally in line with the figures from last year. Then if we look at retail, interestingly, this is quite a different story. So for festive trading, retail was down 4.1% compared to 2024, but substantially outperforming the UK benchmark, which was down by 8.7%. So that's a difference of 4.6 percentage points. And then year to date, retail has actually seen a growth of 5.8% in York. So that's between January and December 2025. And compared to the UK benchmark, which is down at 6.1%, that's a difference of 11.9 percentage points. So a really interesting and positive story to tell for the retail sector. And yeah, something that I suppose I didn't expect when putting this together, given all the negativity and warnings around the effect of online shopping on retail particularly. And this shows us the distribution of retail spend across the year. We can see some really high figures at the start of the year, peaking in May at 21.9%, slightly less pronounced for the rest of the year. And then in December, November time, we actually see a downturn. December more pronounced than November, and that's potentially, I suppose, an inclination to shop online for Christmas gifts, as opposed to stomping the streets and trying, given the rush and the need to buy gifts on short time frames. So we hope that's been useful to you in terms of a sector snapshot and a sales snapshot. And we wanted to just take an opportunity to pause and ask you to post in the chat if you have any observations about how those trends match up against what your business has witnessed or your business has experienced during festive trading or 2025, and if you have any specific comments. So please stick those in the chat as we move along, and we'll address them at the end of the session. And I will just check what's going on with the chat, because I can't view many screens at once. And it's pretty quiet in the chat at the moment, so I'll take that as everyone is happy for us to continue. Okay. Right, so moving on, this is the last slide that I wanted to show you from our sales data. And it's basically showing debit card sales made specifically by residents of York, and that's residents residing within the York local authority area. And I suppose worryingly, what we're seeing from this graph is a continuous and steady decline in sales made by residents across the year, and particularly pronounced during the festive trading season, falling below 10% in both November and December. Obviously, there's a lot of rhetoric in York and the press, particularly about the impact of tourism on the city and residents being, I suppose, muscled out of the city centre in favour of that tourism industry. And I suppose this is one that we, as a bid, are just really keeping a close eye on, and yeah, trying to decipher meaning in the figures and the potential causes of those downturns. So something that we'll look to report on in future sessions as well. Oh yes, and I forgot to add in my annotation there. Right, okay, so now we're moving on to a different data set entirely. Now, this is a piece of software called BT Active Intelligence, which was recently purchased by City of York Council for the city centre and a few residential areas in the surrounding area. And the software essentially captures electronic devices on the the EE and BT phone networks, entering a specific area, and essentially measures the number of individuals visiting that area, which you might consider as footfall. It also records the amount of time that an individual user spends within the area, as well as the demographics and home locations associated with the users of those devices. So quite a significant piece of kit, and robust in its sample size of around 24 million mobile users in the UK. It has the potential to offer us hourly and daily observations of footfall within the city, which gives quite a lot of potential for bespoke reporting around things like events, finding out the impact by day that an event has had on the city centre, which other data sets don't offer, such as Beauclair, because that's a monthly snapshot only. The biggest caveat with this data is that we only have historical data dating back to the beginning of October 2024, so there isn't a substantial benchmark yet by which we can make comparisons against, but we do have it for November and December, so we're able to infer the year-on-year growth for 2025. And in very much the same way that the other graphs have portrayed that, we can see here that during November and December, there was quite a significant downturn in footfall, according to this data set, most pronounced in December, down by 8.7% and down by 7.5% in November. This the data from the BT Active Intelligence software is published by the council in their movement and place data pack, which is being published monthly. We've actually popped a link at the bottom of this report in the source bar there to that report, so that you can go and have a look for yourself. It contains a lot of metrics which I suppose the bid isn't reporting on, things to do with residents and residential areas outside of York. So if that is of interest to you, then maybe you should check that out. And again, it's something that we'll be referring to more moving forward, but we're working closely with the council around this data and I suppose how we get the most use out of it. So another metric that comes out of BT Active Intelligence is the dwell time recorded of individual users. So in November and December 2025, we've observed that around 40% of all visitors to the city dwell for 2 hours or more, which is quite a positive statistic. And sorry, 25% of visitors were only dwelled for 30 minutes or less. It's worth mentioning that any devices captured within the area that don't stay longer for 10 minutes aren't counted in the data. And then this is the third insight from BT Active, which is the peak hours of visitation. And we've pulled out the data here for the hours of the day, from 1 in the morning to 12 o'clock at night, going from left to right, across the days of the week during November and December, which you can see down the left there. And the the highest density of visitation is seen in the darker squares across the table. So we can see that, as you would expect, Saturdays are the highest density of visitation in the early afternoon, but the number of visitors was slightly more pronounced on Saturdays in December than it was in November. Excuse me. Okay, so moving on to yet another data set. I've seen Stefan has joined the meeting, so hopefully I will do hotel occupancy justice in my explanation. So this is has been very kindly provided to us by the Hospitality Association York and gives us an insight into the performance of hotels over the festive trading period and further back historically. It essentially is taken from performance data that hotels hold themselves. That data is then pulled into a general data set, and the average number of rooms sold divided by the total number of rooms available gives us a percentage figure for occupancy within any given time period. We can also decipher from the data the average charge per room within that time, which gives us an indication of how much hotels might be able to charge within that given period as well. The data is updated monthly and is provided to us on that basis as well. So this gives us an indication of the monthly trends for hotel occupancy dating back to 2023 all the way to 2025. As similarly to the previous graphs that we've shown you, we can observe that there is a downturn at the start of the year, but actually hotel occupancy has done fairly well during 2025, and the year to date stands at 1.3% uplift compared to the previous year, which is a positive story for the hotel industry and possibly supersedes, I suppose, the in-store spending data, which we showed you earlier for tourism. So showing that they are getting their online bookings. And specifically during the festive trading period, the month of December helped to kind of drag up the year-on-year growth for that period, whereas November occupancy was very similar to the previous year. And then if we look at average day rate across the months of 2025 and further back, we can see, I suppose, a mixed bag with some growth at the start of the year and then kind of teetering up and down as we hit June onwards, some decline, some increase. And this is the final, I suppose, data set that we wanted to share with you today, which is shop vacancy, which I'm sure many of you will be aware of, or you've heard referenced in other conversations around performance. And it's essentially a measure of the number of unoccupied commercial units in a given area. In our case, York City Centre, and the figure is expressed as a percentage of the vacant units compared to the total unit. The dataset for York is maintained by City of York Council and is published on the York Open Data Portal, which is where I've accessed it to generate the graph that I'm going to show you now, which essentially shows the percentage vacancy rate in any given month dating back to 2023, and that's for the city centre specifically. We can observe that vacancy levels have been relatively high through 2023, well, particularly the end of 2023, moving into 2024, but then have since taken a downturn, quite a sharp downturn in the most recent year, 2025, and have hit an all-time low of 5.6% in April and then reoccurring in October, which is quite a positive story to tell. Comparatively, Knight Frank recently published an estimation for the national UK high street vacancy rates at the end of Q3 2025, which stood at 13.5%. So there's quite a big disparity between the two. A positive story for York in terms of demand for commercial space, but also kind of highlighting a shortage of commercial space for new businesses to move into at present. Okay, so that's everything that we wanted to show you in terms of graphs. You'll be relieved to hear. I'm just going to summarize what I think are the key points that we've looked at today. So in terms of spending, York experienced a decline in consumer spending and customer numbers during the festive trading period and across much of 2025. However, performance consistently remained stronger than the UK benchmark on both of these measures. The food and drink sector continues to account for the largest share of total debit card spend in York, but recorded declines during festive trading and year to date, underperforming relative to the UK benchmark. Despite a notable fall in festive trading sales, the retail sector, however, delivered some of the strongest sales growth of any sector in York 2025 and significantly outperformed the benchmark for the UK. Spending by York residents continued to decline, with the downturn particularly pronounced during the festive trading period. Footfall fell sharply over the festive trading period, although the decline in customer numbers was less severe, indicating changes in visitor behaviour rather than demand alone. York hotel sector recorded a strong uplift in occupancy during the festive trading period, alongside a more moderate but positive year-to-date increase across 2025. And shop vacancy rates in York are currently at a historic low and remain substantially below the most recent reported average for UK high streets. Okay, so that concludes our presentation part of the webinar. I'm just coming back to the chat now and see that there are a few things that people have popped in there. We'll use this opportunity to answer a few of your questions if you have them, and then we will leave you to enjoy your Thursday after that. So Rachel's posted a reminder that the question was, how do these trends match up with your observations? So yeah, we'd love to hear if what we've shown you today matches what you think you've observed in your business or when you've been in the city. Message from Tom here saying that we've seen stronger sales versus 2024 despite notably lower footfall, especially with residents. So that from a retail business, that's definitely what we've seen within the data we've just looked at. Jessica said that 2024 was our best year to date, and 2025 being the worst, excluding 2020 and 2021. So not knowing what sector you're from, Jessica, that's, yes, I suppose lends itself to the general downturn of trends that we've seen across 2025. So sorry to hear that as well. Hopefully 2026 will be a change of direction for those figures. Chris from City Cruises says, first half of the year was strong, tailed off slightly in May through the summer, with further declines from September onwards. Really poor in November and December, but impacted by river levels. Bad but good to see the anecdotes of the city seeming quieter are backed up by the data. Wonder why resident spend is down. So thanks very much for that, Chris. Obviously, river levels affecting the business directly there, but good to hear about the positives for attractions. Then Stefan from Hay Group says, thank you, Chris. November and December occupancy has grown 4.7% year on year, which is positive. However, the average day rate has declined in both November by £3 and December by £2.70, which has been disappointing and affected overall conversations within the industry, which is, yeah, so Stefan giving us a direct sort of demonstration of how the occupancy and the day rate fit together and what that means for the hotel businesses specifically. And then Andy from Monk Bar says, we are down 2024 versus 2025 and see less locals and regulars. Do we have any data as to how out of town has performed? So yes, we do actually have some data on out of town, although it's just kind of a benchmark figure as opposed to a breakdown of specifically monthly spend. If you just bear with me 2 seconds, I'll bring up our most recent spend report for December from Beauclair. So we basically had an opportunity to draw a geofence around certain areas of the city. So we thought it would be a good idea to try and grab some data from the out of town shopping centres. So our geolocation, our geofencing, is basically ringed around all three of the Clifton Moor designer outlet and Monk's Cross sites, and they basically give us a collective percentage on how well they've done. So look, we'll just have a very quick look at that. And I'll share my screen with you again, just so you can have a little look at this. Sorry, bear with me. I've got quite a lot of things open now. So share. Okay, this is a view of our monthly report that we receive directly from Beauclair. We don't share all of this information because some of it is caveated. So within this comparator section, there are other comparator cities listed there, including Leeds, Bath, Chester, Edinburgh, which is all interesting food for thought. However, because each of them have a different, well, I suppose, size of area, a different number of businesses within them, a different makeup, we believe that making direct comparisons is a bit like apples and oranges, so not something that is necessarily to be taken to heart. However, with the out of town shopping centres, I think because that is based on local knowledge, we're safer to make a comparison there. So we can see the December sales versus 2024 for York are down 4.6%. Sales year to date are down 1.8%. Then if you look further down that table, you can see shopping centres, which alludes to the three sites that I talked about earlier. So interestingly, shopping centres have actually done marginally worse in December than York City Centre, which is nice to hear, given that, December's a really key time for trading, as we've mentioned already. But actually, year to date, shopping centres are up by 2%, whereas York is down 1.8%. So that's telling that I think, the convenience of the out of town shopping is maybe getting that year-round visitation, whereas York is making its money at certain times of year. That would be, if I had to guess, those would be the conclusions that I might draw from that. And then the GB or the UK benchmark is also listed at the bottom there. So yeah, we can see York actually underperformed compared to the UK in December, but is outperforming generally across the year, 1.8% down versus 3.3% down. So hope without waffling, I hope that's helped to answer your question, Andy. And Andy said I should have qualified that with that we have some top line from our data, but I'll try get some specifics from Designer Outlet. Oh, sorry, that's from Andrew from our team. So yeah, it sounds like this is a point of interest and something that we can probably circulate more information on and report on in more granular detail during our next session and in reporting moving forward. So I suppose the last thing to say for me is, if there's no more questions, thank you very much for joining us today and for your time. As part of the follow-up, we'll be including a short survey, which we'd really appreciate your feedback on how you thought the webinar went and how we can potentially make it better moving forward. We're running these webinars quarterly, so the next one will approximately take place in April, and will hopefully as well be in a really good position to demonstrate to you how this new web asset that we're launching as part of the York Data Intelligence Hub is going to work, and how you can use it to benefit your business. So thank you very much, everyone, and I hope you enjoy the rest of your Thursday and the rest of the week. All the best.